Welcome everyone to today's CFDA webinar, which is being hosted by our partner CBIZ. CBIZ is a financial services and business consulting agency which helps businesses of all sizes, and we're so incredibly thankful for all the support they've offered to our members and the fashion design community this year in response to COVID-19. They've extended one-on-one advising and consulting to help designers and their teams navigate the complexities of government loans and financial planning during this difficult time. So for today's webinar, we're going to dive into PPP loan forgiveness and ongoing financial planning. Before I introduce our two CBIZ presenters, I'd like to also extend our thanks to Eric Seaman, who some of you may already know. Eric has worked with us tirelessly this year to share the most relevant and timely information around loans and financing with our community, and also support us with great professional development webinars and content. Following this webinar, if anyone has any follow-up questions, I will forward you Eric's contact information so you can get in touch with him directly. One piece of housekeeping before I introduce our panelist: we have a chat feature as part of this webinar. So feel free to submit questions through the chat feature. You can submit them anonymously if you feel comfortable submitting your name. It doesn't matter, we won't read it out. And towards the end of the presentations, we'll allocate about 10 minutes to have our experts address those questions. If we can't get to it, we'll follow up with you post-webinar. So it's my pleasure to introduce our two experts from CBIZ today. First, we have Stephen Nikokiris, who is a managing director and shareholder at CBIZ. He has spent over 30 years servicing the apparel industry, where he provides hands-on practical business advisory, consulting, auditing, and accounting services to middle market, privately held, and family-owned companies and brands. A true client advocate, Stephen helps his clients with a wide range of business needs, including effective strategies to enhance profitability, business and tax planning, supervising audit engagements, and other special projects. We also have Jake McDonald join us. You can't see him, but you will be able to hear him. Jake is a director in the CBIZ Credit Risk Advisory Services practice. Before coming to CBIZ almost 8 years ago, he was the COO of a fintech company focused on enterprise payments. Prior to that, he spent over 20 years with various banks in corporate lending and structured finance roles. Jake spends most of his time evaluating and mitigating credit risk issues for lenders and investors with portfolios of consumer, small business, and corporate loans. So thank you, Steve and Jake, for joining us today, and I'll let you take it from here.
Great, thank you. Thank you so much. For everybody attending today. We have a lot to cover. I know this is very timely for you. My name is Jake McDonald. You just heard me introduced by Sasha. And I'm going to go through some of the PPP things you know, and then I'm going to hand it off to Stephen a little bit later. So the agenda we want to cover today is a checklist that's free and available on CBIZ.com. that you can use. Also deadlines and timing considerations for the PPP loan forgiveness. I want to briefly cover the PPP Loan Necessity Questionnaire, which was recently introduced, do some PPP updates, and then talk about some PPP modifications that might happen in this pending stimulus legislation. And then we're going to be looking ahead to your ongoing financial strategies, customer credit and vendor support, and then have a Q&A session. And if we can't get to all your questions, we will follow up with any we cannot actually get to. Let's go to the next slide. All right, so this is an excerpt of the CBIZ PPP checklist for loan forgiveness, and it's basically helping you make sure that you have all the materials you need to complete the loan forgiveness application. This is a free resource and a handout we're going to provide to all the attendees. And basically, you want to make sure that you start off with your application and decide which application is appropriate for you and your business. The easy form is more geared towards sole proprietors. people with very few employees and those that did not have any reductions in FTE, full-time equivalents, or wages. It's a little bit streamlined. And then you also want to make sure that you have the proper documentation regarding your compensation, because most of the eligible expenses are around payroll. So you want to make sure that you have those. Also keep in mind the cap on highly compensated individuals of $100,000. And that's on the actual cash compensation, not any eligible benefits that you might be able to pay them. If you're going to be also including eligible non-payroll expenses, you want to make sure you have those type of documentation for your rent or utilities or those types of things. More than likely, though, you should have more than enough in terms of just payroll expenses, and that can make things simpler as well. So if you have eligible payroll expenses in excess of your loan, then you can just focus on that. There's also a 60-40 split. A minimum of 60% of your eligible forgiveness expenses have to be payroll, and up to 40 can be non-payroll eligible expenses. So keep that in mind. Make sure you have at least 60% as eligible payroll expenses. And then that just kind of a basic checklist to make sure that you have everything you need and are able to, provide what you need to your lender. Also make sure that you coordinate with your lender on the PPP loan. They may have additional criteria that they want in addition to this basic checklist. So you want to make sure that you're also using a checklist that they have, and however they want the information and documentation to be able to have them review and process your application on a timely basis. So we can go to the next slide. So as we end 2020, there's some timelines we want to go over and the significance of that. So the covered period when this originally began was 8 weeks. Then in the summer, they expanded it to a 24-week covered period, which most people chose just because it was more flexible. And it basically allows you to make sure you can cover all those payroll expenses and have enough eligible expenses to achieve full loan forgiveness. Remember that your payroll costs are incurred or paid. You're not going to be doing future costs. If you have a payroll cost that was either already happened during that covered period, so maybe it began before the covered period started, but it ended in your covered period, that's okay. Or if it was paid during your covered period, that payroll cost. You also want to keep in mind the safe harbors for wage reductions. So for 12/31/2020, that's the safe harbor date you have to keep in mind. So this applies to wage reductions that were greater than 25% in the wages during that covered period, and that does not apply to those highly compensated individuals that were capped at $100,000. So keep that in mind as well. Let's go to the next slide, please. The other safe harbor you want to keep in mind is your full-time equivalent, and that's your head count that you have. So what you want to make sure is that if you had any reductions in staff, that you try or attempt to return them to the pre-COVID-19 levels that you used when you first made that application and you put in your head count. You're trying to get it back to at least that level so you don't have a reduction in your loan forgiveness. So it's very important to attempt that. You do have exceptions or exemptions that you're allowed to do. And if some employees did not come back because they voluntarily resigned or was termination for cause or for other reasons, you have to have the proper documentation. And so what you want to have is the written offer, the written rejection, and the written record of the effort to rehire a similarly qualified individual. So you want all that documentation to demonstrate that you're eligible for that exemption and not having the full head count that you had when you first applied for your PPP loan. There's also exemptions for government restrictions. So if you had restrictions imposed on your business for whatever reason, that's also an exemption in being able to maintain that full-time equivalent headcount that you had prior to the COVID outbreak. So that's an exemption as well. And you want to have that documentation as well. So if you receive notices from your state or local governments, or if you're able to print them out and show that, and then show the time periods those were in effect, that's all part of your documentation to make sure that if your head count's not where it should be, that you're able to have that exemption. And remember, this date is as of 12/31/2020. So keep that date in mind. And we can go to the next slide, please. Okay. So as I've been talking about here in terms of this timeline, the safe harbor date is 12/31/2020. That's the most critical date for everyone. A lot of people ran out of the PPP funds and may have had to do furloughs or things like that. But to ensure the full and complete forgiveness, remember to make those attempts to bring back those people if you're not at the same headcount that you were before. Another important thing to keep in mind is that the deadline to actually submit your application is 10 months from the end of your covered period. So for many of you, your actual end of your covered period will be 12/31/2020, or with 24 weeks, maybe it ended at some point, depending on when you received your loan, maybe in November or at some point in December. Maybe it's over at this point. But what you want to do is you have up to 10 months from that end date of that covered period to actually submit your PPP loan forgiveness application. So keep that in mind, that there's plenty of time to be able to do this, even though you're looking at that safe harbor date. That's not the same thing. So you do have time to complete and submit the actual PPP loan forgiveness application. Now, when you do that, the lender has up to 60 days to review this application before they submit it to the SBA. So during that 60-day period, they may come back and ask you for missing items or clarifications. And then once that's complete, they will forward the application and any supporting materials onto the SBA. And the SBA has up to 90 days to make a decision on the PPP loan forgiveness. So at this point, if you haven't started this process, this will all be done in 2021. So you have to consider that, this is more than likely not going to be a decision you're going to get back from the SBA this year if you have not done so already and if it's not already in progress. And remember that, you can always submit your application early for forgiveness during your covered period if the funds have been utilized, if you're all done. But at this point, many of you might be looking at that safe harbor date and want to have that information and be able to demonstrate that and put that in there. I'm going to move on to the next slide, please. All right. This is a very important thing that came up in October, and it was not on the radar really for any of the borrowers or any of the lenders. This is basically pertaining only to those who have PPP loans of $2 million or greater. So if that's your situation, please take note of what this slide is saying. You have a PPP loan of less than $2 million, then you got very lucky and do not have to complete this questionnaire. And what this questionnaire is doing is it's basically asking the business to provide additional information to justify the necessity of your PPP loan. And part of this is coming from over the summer, if you recall, several businesses that were not the intended audience of this loan received PPP funds in millions of dollars. And that public perception created negative feedback and resulted in a safe harbor this summer where you could return your PPP loan if you deemed that it wasn't necessary. That came and went, and at the time they had guidance that said that even if the SBA determined that your PPP loan was taken in good faith but not necessary, that it would basically just have to be repaid and that there would be no criminal prosecution if it was done in good faith. What you have to do on the questionnaire is that as soon as you receive it from your lender, you only have 10 days to complete and return it. The form covers various items that you need to complete, and there's already the form available. You can get it from the SBA if this is your situation, so you can start to work on it. What you have to do is you have to compare your revenue from 2019 and 2020. You have to also list any impact on your business operations from either government restrictions or voluntary restrictions. You include any mitigation costs you had to operate your business or to keep it operational. And you also have a liquidity assessment section that you have to complete to show what other resources you had that were available to you. The form also allows for free-form text and explanations and requires documentation for certain answers. On the final page where you sign, you have to perform 3 certifications. And what we're suggesting is that you have legal counsel review before you submit this form to the SBA. So you probably want to, if you are required to complete this form, I would make sure that your counsel is looking at it now and also when it's completed to make sure that whatever you are saying or putting that in and certifying to is what you should be saying and certifying to. Remember, only for PPP loans of $2 million or greater for either for-profit or nonprofit borrowers. Next slide, please. Okay, here's a couple updates, and maybe these are more relevant for some of the attendees here. About a month or so ago, there was additional guidance given for PPP loans of $50,000 or less. And basically what it did was it provided an exemption for the FTE employee reduction penalty and also for the employee salary and wages reduction penalty of 25% or more. So if you have a loan of that size or less, and you had FTE reductions or wage reductions greater than 25%, you now have an automatic exemption for that. So that's great news. So that will not impact your loan forgiveness ability. So if you had, fully utilized all your eligible expenses, can fully cover the entire PPP loan you took. Now with these exemptions, even if you had FTE reductions or wage reductions, that will not impact the amount of your forgiveness. Also, just re-mentioning that if you apply for loan forgiveness early prior to the end of your covered period, you will forfeit that safe harbor provision allowing the restoration of the salaries or wages and FTE by December 31st. So at this point, I think that it's best to wait until that safe harbor date and see what happens and make all the attempts and try to get those exemptions so that you're not negatively impacted on the amount of forgiveness you're eligible for. And then also there was a clarification on the reduction in loan forgiveness for wages and that each employee's reduction amount should only be reported if it's greater than 25% reduction. So next slide, please. Okay, so for where things are now, we were hoping that we'd have more clarity. Things are still very fluid as of today, as of right now. I was updating this slide about an hour or two before the webinar. Just to give you a sense of the whole PPP program of where we are right now, over 5 million businesses received over $521 billion in PPP loans, and over $130 billion was unused. In terms of the total CARES Act program, the Treasury still has $454 billion in unused CARES Act loan funds. And all of these are set to expire based on the way the CARES Act was written by December 31st, 2020. So what's happening as of right now? As of right now, there's a bipartisan Emergency COVID Relief Act of 2020 of $748 billion. And there's a very high probability that this will pass within this week. This is a compromise bill between both parties, and In the next bullet point, you'll see there's the Bipartisan State and Local Support and Small Business Protection Act of 2020 of $160 billion. It actually has a much lower probability of being passed in 2020. It might be passed with the new Congress, but if you add those two amounts together, if you may have seen that $908 billion compromise plan, that's where you get that total. And to achieve the compromise, what had to happen was that they had to separate the two main sticking points. So the Democrats wanted the state and local support funding, and then the Republicans wanted to have business liability for the businesses. So those 2 points were extracted from the overall bill, leaving the bill for the Bipartisan Emergency COVID Relief Act of $748 billion, which we believe there's a majority from both parties to be able to agree and approve and get the president's approval to have that done this week. So more than likely, that other bill for $160 billion will not happen in 2020, and we'll see what happens in 2021 with the new Congress. So what do we get out of this new bipartisan bill? What's in there right now is that there would be a new PPP loan round of $300 billion. So that would be available to businesses with 300 or fewer employees and whose revenues for a quarter in 2020 were down more than 30% when comparing it to 2019. Now, the original guidelines for businesses eligibility was the standard SBA of 500 or fewer employees, with exceptions for certain NAICS code or industry codes, which allowed for higher employee counts depending on what type of industry they were, if they're labor intensive. There's also a possibility to keep the money where they want it to go to, of reducing that maximum loan amount to $2 million instead of $10 million, so you're focusing on the smaller businesses. And as I mentioned before, it's now or never. Would would have to happen by the end of this week before Congress recesses for the year, or else it would be pushed all the way into sometime in the first quarter of 2021. And then also another major point would be if they would do an automatic or a streamlined PPP loan forgiveness for loans of $150,000 or less. And this is important because if you look at that $5 million in total PPP loans that were distributed, if you look at all loans of $150,000 or less, that represents over 4 million of those loans. That's also 4 million loans that the SBA does not have to review and approve. There's no way the SBA has the staff to be able to review 5 million loans within that 90-day window that they've given themselves for when they're provided back to them from your PPP lender. So a solution would be to create a super streamlined version or automatic forgiveness for those loans of $150,000 or less. So that's a very high probability of that being extremely quick. So it's another reason to potentially wait and see what that guidance is until after December 31st, 2020, and see if they provide any updates or clarifications on those type of loans. So if you're around that figure for your loan or less, I keep an eye out for that, because that's probably something that will have the most impact on what you may have to do for loan forgiveness. Let's go to the next slide, please. Okay, I'm going to hand it over to Stephen, and he's going to walk you through looking ahead to 2021.
Hey, Jake, thank you. Hello, everyone. I know that all of us have been going crazy with these PPP loans and the forgiveness and taxes and all that. Hopefully there's a second round. It sounds like that's likely. Looking forward to working with all of our clients to help them with that, and anyone on this call. But I want to talk a little bit about really what everyone's dealing with right now and how business is going for you. We tried to gear this. We looked at the attendee list. We realized there's a lot of mid and small growing companies here, and we really, really want to help you because we work with you every day. I've been doing this for a long time. So I know that you spoke to one of my partners, Jay Silver, a couple of months ago. Just want to big a great shout out for Jay. Unfortunately, he's not able to be here today, so I'm happy to pitch in. I'm really happy to be here. But Jay, hopefully get better quick, and we'll see him next time. So I want to really talk, about cash. Cash is king. Now, I know we've heard that cliche, but boy, I think in this time it is no more evident than ever. And one of the things I'm sure, as you know, what I've seen over my years working in the industry is, a lot of young growth stage fashion companies just are generally undercapitalized, meaning that they're not sitting with a lot of cash in the bank in order to weather a storm. And boy, is this a storm that everyone's got to weather. So clearly, this created a lot of issues that we're all aware of. And, it's already been 9 months, 10 months, and I know that PPP money is gone. And so now, the next phase is really kicking in. And, I know, again, people have said it, the fashion business is what you're in. But, I like to think of it as the business of fashion. And I think it's really important that you do too, because it is a business and you have to manage it that way, or else you're not going to give yourself a chance to survive. And really, so I really want to focus on two things. One is just surviving, and I think that's critical for you guys today, and then thriving, which is obviously, I really want to focus on that as well. So just talking really, about surviving, I know over the last several months, we had these PPP loans, and you had your businesses, your businesses have been affected by what's going on. Your business could be down anywhere between 20% and 100%. And we had all these related expenses, that were as part of COVID, that you've cut. Obviously, you've cut payroll, you've cut T&E. You might not have cut rent, but you're certainly not paying rent right now. And some of those expenses, may or may not have come back. A lot of our clients, they have come back somewhat, but not all the way back to pre-COVID levels as of now. I really would like to talk a little bit about an example of a real client of mine. He may be on this call. I know he's a member of the CFDA. And it's a client in the sportswear business. Actually, a woman-owned business, I apologize. The company has been around for 20 plus years, mid-sized company, very successful, it was making money. They signed a 10-year lease about 9 years ago. Their rent was significant. During COVID, they realized that they could operate working from home. People were able to operate pretty effectively, and they really didn't need the space that they were in. They were paying several tens of thousands of dollars a month of rent, and the owner just, really realized that they could function without that rent. But they had a 10-year lease. It's a signed contract. Now, I know if you speak to your lawyers and you speak to your business advisors, 9 out of 9 or 9.5 out of 10 are going to tell you that that is a legal obligation that, really cannot be broken. And they'd be right. It is a legal obligation, and it is a contract. But my client, went to the landlord face to face, looked the landlord in the eye, and told them, and has been a great paying tenant, by the way, which is critical. And they told the landlord, they are really, really sorry, but they cannot afford the rent, and they don't want a deferral. They don't want, they don't want to push down the road. They want the rent wiped out, and they've already cleaned out the space. It's empty, and they'd like to hand back the keys to the landlord. You know what? The landlord said, okay. They walked away from hundreds of thousands of dollars of obligations by doing that. And boy, was that a kick in, really helped them, with the business going forward. Again, I'm not going to say that's going to, everyone's going to be able to do that, because you're not. But you will be able to speak to your landlord and certainly ask him for adjustments and reductions, and certainly deferrals for months and months and months. And I strongly encourage you to do that. Strongly encourage you to do that. The continuation of just running a business is cash flows. Now, I know I'm the accountant, and I know you're not an accountant, but I'll tell you, you really need to think about this. In this environment, running your business and generating cash is critical. I use the term break-even analysis. Do you know what it is? Do you know what your monthly costs are? If I ask you, what is your overhead a month, a week? Do you know what it is? What do you need to do to break even? How much revenue do you need to bring into your company in order to cover your expenses? I don't know if you know that. You should know it. I want you to know it. And I want to help you in your business. It's critical to know. one of the things we've done for almost all of our clients is help them with cash flow projections. Some of them could do it themselves. Some of them need our help. You need to do it on a short-term basis and then on a long-term basis. But more immediately, I don't really care about 3 years from now. That's irrelevant. We need to get you through the next several months. Hopefully, with this new vaccine, I don't know. I'm hoping, 6 to 8 months, things are not back to normal, whatever that's going to be, but some kind of a new normal. So we need to get you there. So putting together a cash flow projection over the next 10, 12, and we use 13 weeks. It's kind of a term that's used in the financial community, but it's a short enough time, but it really is a time to give you an idea of where your expenses are, where your income is, what's coming in versus what's going out. You need to know that, because you just need to be able to survive and get to the next step. I think, my theme here is too, you need to have a team, and you have blind spots. If you don't think you have blind spots, I'm sorry to tell you, you're really awakened. I have blind spots. Jake has blind spots. Sasha has blind spots. Eric on this phone call. We all have blind spots. We're human beings. The most important thing to do is surround yourself with people to help minimize those blind spots. And in your business, there's a lot of roads you can take, and a lot of things can go wrong. A lot of things can go right too. So I think it's really, really important to build a team around you to give yourself the best chance to survive and eliminate those blind spots. And that team includes your people, your internal people. It includes external people. A lot of you have advisors. Some people are members of groups. I know hopefully there's some Vistage members out there. I'm a member of Vistage. You have your lawyers, you have us, your accountants. You have your bankers, you have your factors. All those people are part of your team. You need to use them to your advantage and get them listening. Ask them questions about what they see. Ask them questions about how they could help you. That's what we do with our clients, and that's what you need to do. Next slide, Eric. Okay. So hopefully now it's 9 months later, you're still around. Great. I know maybe 3 or 4 or 5 months ago you weren't sure you would be, but you are. So you've learned a little bit. Let's now talk about the next step, now that you've stabilized. Those expenses I spoke about a couple of minutes ago, you've cut, payroll has been cut, rent has been deferred, you probably didn't have a lot of T&E, certainly not going to trade shows. What are you going to do with that money? You have to start spending money to make money. I'm sorry to say, but it's true. One of the things, I'm not sure if you're aware of or not, and it is COVID related and it's not COVID related, but it's something called the Workshare program. It's a state-run programs that allow you to keep employees working, but on a part-time basis. And while those employees are working, they could also get unemployment. Now, if you remember a couple of months ago, before they terminated the $600 extra unemployment, that was a huge benefit, huge. And a lot of people were making, actually, they could be working half their time, but making as much on this Workshare program than without it. It's a great program. I'm just telling you to be aware of it. If you have any furloughed employees that you want to keep, maybe 2 days a week, 3 days a week, they could get paid 2 days a week by you and also get paid unemployment. And hopefully with this new stimulus coming in, they're going to spike up the unemployment, maybe not to $600, maybe $200 or $300. So people could get back to a pretty nice salary, close to what they were making before. So it's a great program, and please be aware of it. Now, again, I don't want to talk about, I know everyone's talking about direct consumer and e-commerce. Okay, you're right. But I'll tell you, hopefully this proves it. You really needed to do it. Hopefully you did do it. Or if you didn't, you're going to be doing it now. But I'll tell you, if you want to build your brand and you want to generate some business, why wouldn't you do or create a direct consumer business? It's just another customer. It's a real customer, and you have direct access to it. And I'll tell you, I got another example. This is real. It just happened in the last 4 months. A client of mine, small company, not a big company, handbag accessories, nice name, not a big name, but been around for a long time. They were selling Saks and Neiman's. What do you think happened? The business went down. April, they did about 3% of what they normally do. May, they did maybe 10%. The owner was worried that he was dead in the water. Dead as a doornail. He didn't have an online business. He did. I'll take that back. He did maybe 1% online, if that much, maybe a couple $1,000. It was nothing. He furloughed a bunch of people. He went out, he brought in a CEO who had experience building online businesses. And he didn't pay him huge money to do it. This person bought into his business and hopefully might end up with a piece of the business. He came in, I'm telling you now, it's 4 months later, and they're generating thousands and thousands of business online in just a short period of time. And now they're not talking about going out of business anymore. They're talking about thriving. They're talking about growing. And they're talking about us doing more work. It's just a great, great story. And it's true. You could do it. You know, I don't want to be a little nerdy, but I am a Shark Tank fan. And I don't know if you guys are or not, but you know, there are metrics in business and you guys need to have them, you know, and there is a concept of customer service cost and customer acquisition costs. And you know what, it really is important. You need to figure out how much does it cost to get you a customer? What are your margins? If you don't know that, you better know, and you need help. If you need help, get help to do it. But I can't tell you how important margins are in your business. Do you know what your margins are? And I'm not talking about your margins going in, because we know that when you go in to sell your product, your first price, maybe they're going in at 60, 70%. I'm talking about, do you know what your margins are at the end, after all the markdown money, allowances, display allowances, warehouse allowances, anything else your retail customers could think of. That's why online and e-commerce is so much, you know, really such a great business. The margins are generally at least double, maybe more than double what your wholesale margins are. So just think about it. You could literally do half the business online and generate as much or more gross margin dollars than you do doing online with your wholesale customers. Just makes perfect sense. Perfect sense. Next slide. Okay. A couple other things. In this environment, you know, knowing your customers is critical. I know all of you are fighting for business every day. You want to generate a sale. You might get an order tomorrow. You might have got an order yesterday. A nice order that you want to service. You have the inventory. You got to be smart. You can't just ship any customer. You know, if you're factored, you know what I'm talking about, because you know your factor will give you, will check the credit on these customers. If you're not factored, you better speak to somebody who knows about your customer. Make sure that you don't ship goods out the door tomorrow and this customer goes out of business in 30 days. It really, really is important, because the cost of your inventory actually is the single largest cost of your whole business. Probably double or triple your monthly overhead. Could be double or triple your annual overhead, generally. So be aware that inventory is critical. And I'll tell you, you know, there's a concept of buying smart. It's never been more important than now. And I think you know what I mean when I say buying smart. And I don't mean overbuying. Overbuying now is death. You know, I'd much rather you leave your customers a little hungry, you know, and selling out inventory than leaving over 10 or 20 or 30 or 40% inventory, because the off-price retailers just got more than their share of opportunities to take on goods right now. So please, you know, I wish I could give you a model to buy smarter. I can't. But it's not just looking at what you did last year or looking at what you did last month. It's really speaking to your customers, speaking to your buyers, speaking to your salespeople, and really thinking about it hard and trying, you know, to come up with a realistic number that you're going to commit to. You got to know your customer. It's really important. Will they pay? You might ask them to pay early. And if they pay early, they might want to anticipate, meaning take a discount. It might make sense to allow them to do that, to get your funds quicker. So maybe, you know, it might make sense to get 2 or 3% off if they could pay all your money up front. And your vendors. Your vendors are critical. You know, a vendor, it could be like your bank. If you go to your vendor, if you have a relationship with your vendor, you know, ask them for additional time. You know, they realize what's going on. They need you, hopefully, as much as you need them. And that's what I talk about, consolidate. You know, right now, if you're shipping, if you're using 8, 10, 12, 13 vendors, you're doing a little bit with each, you're not that important to them. They're not as important to you either. You want them to be more important to you. So maybe you could take those 8 or 10 and consolidate to 2 or 3. And then you could go to them and say, look, I'm going to give you triple the business. I need some help. Give me a price reduction, give me additional time. That's critical. I think that's something that you could all do. I don't know. Am I running out of time, Eric?
I think we're good.
Okay.
Sasha,
We
if
tried.
you want to jump in?
Yeah, we have a few questions. They're actually all about or directed towards PPP. So the first question I have is, if we use the full 10 months to apply for forgiveness, then our lender uses 60 days to evaluate and the SBA uses 90 days to respond, then a portion of the loan is not forgiven. Will we owe interest accrued during the 12 to 15 month period?
Yes, so that is correct. So the day you receive your loan, interest started accruing. It is not payable until the decision on loan forgiveness is made, because you may receive 100% forgiveness or partial forgiveness. So once that determination is made, that's when you need to start having to pay that accrued interest at that point in time. And remember that this is a very low cost of funds loan. Even if you do end up having to pay this loan, it's 1% interest. So it's really up to you. I would think that once we get into 2021 and we get more clarity on if there's streamlined forgiveness for those loans of 150,000 or less, that there's really no incentive to wait any longer to complete that. But that is true. Interest is accruing, and then you will have to pay it for the unforgiven amount of the loan, if any.
Okay, thank you. The next question is, will we ever be able to push for loan forgiveness in 2021, not in 2020?
I'm sorry, I didn't understand. Does it say push for loan forgiveness in 2021 versus 2020?
It says push for loan forgiveness in 2021. I can ask for more clarification if we can go on to the next.
Yeah, I'm not exactly sure what that question is trying to ask. In terms of the timing of submitting, I think at this point we're on December 15th right now in this webinar. Your safe harbor date is within 2 weeks. I would suggest at least waiting until that time period. There's no rush to submit by 2020. At this point in time, I think that it's probably the best course for everyone to wait until that safe harbor date passes, and also hope that there'll be additional guidance and the final legislation that comes out now that may have certain details that are important. Things like the eligibility of tax deductions for these expenses that are being reimbursed for the PPP loans, things like that. So it's probably best to wait at this point and then see what results, because unless you're worried about not being forgiven in accrued interest, I would just wait at this point.
Thanks, Jake. The next question is, if you received a PPP loan due to loss of consultancy income, it's phrased in two different chat boxes. What if you received a PPP loan due to loss of consultancy income but have no employees?
So it sounds like a sole proprietor type of situation where it's a business of one person. So depending on the size of your loan amount too, it sounds like, if business completely dried up due to the circumstances, if the loan's under 50,000, you don't have the wage reduction or all that other stuff to worry about. You have that exemption. But, a lot of people are in that boat where they just, it's complete, stoppage of cash flow and revenues. So, in that situation, you're hoping for another round at this point, so hopefully you would fall into that new guidelines of 300 employees or less, your revenues being down more than 30% when you compare a quarter in 2020 back to 2019, and you would then be eligible for a new round. So hopefully that's what's going to come out of this new bill for $748 billion. So I would keep my eyes open for that and be ready to submit for another round of PPP if that's your situation.
Perfect. This is a bit of a long question, so bear with me. By the ruling, the PPP loan is not taxable, but the qualified expenses covered by the PPP loan will not qualify as deductions. In what year do we need to exclude the expenses? Also, what if the forgiveness will not be for the full amount we expect?
Right. So I am not a CPA, but I have probably been on 20 plus webinars with my colleagues at CBIZ MHM on this topic.
Jake,
As it stands right now, there's a recent. Okay, that'd be great. Thanks, Stephen.
Yeah, no, the answer is that you have to reflect the expenses in 2020 because that's when they were incurred, that's what you spent. For example, if you had a $150,000 PPP loan and you expect $100,000 of that to be forgiven on your tax return for 2020, as of right now, again, these rules are hopefully subject to change and hopefully this will be revised. But as we speak today, the IRS has come out and said in that example, if $100,000 is expected to be forgiven, even though you didn't fill out the application yet, and even if you wait 10 months, from the date of the covered period, in your 2020 tax return, you're supposed to exclude those $100,000 of expenses from your taxes. So that's not a great result, but that is what the law is today. So you're supposed to take you're not supposed to include those expenses in 2020 because that's when you incurred the expenses. And the $50,000, for example, that you don't expect to forgiven, that would be deductible, that you could deduct in 2020 as well. I'm sorry, so just to close the loop on that. So anything you don't expect forgiven, you can deduct. Anything you do expect forgiven, you cannot deduct.
Thanks, Stephen. The next question is, if we have a loan of less than $50,000, since FTE and wage reduction is exempt, do we fill out the easy form?
So the easy form is intended if you do not have FTE reductions or wage reductions. So it's really more geared towards sole proprietors. And if you're a sole proprietor, you still have your business going and all that. There is no wage reduction because your FTE count was 1. And it's 1 when you submit it. So it's really geared towards very small or sole proprietor type of companies with no changes in FTE or wage reductions. But if you are in that 50,000 or less PPP loan, then they gave an exemption for that. So you can use the easy form to be able to complete that and do that.
So I'm gonna read it a little differently than it's phrased, because I'm assuming this person means if we did not hire everyone back, that I guess was either furloughed or laid off by 12/31, how do we calculate the forgiveness? Or how will you calculate what the forgiveness will be?
That isn't, they didn't provide the metrics on how the deductions work, but it could be more than likely if you had 10 employees and then you end up with only 8, they could reduce it by 20% because you had a 20% reduction in FTE. That's not completely transparent in what the SBA has provided. All we know is that there will be a reduction if your FTE is not what it was prior to when you had your application, or if your wage reduction exceeded 25%. So what you want to make sure is that you make those attempts that I mentioned earlier. So if you have a lower FTE count now at the safe harbor date, you want to have the reduction be due to an exemption that's allowable, such as there was voluntary resignations, if there was termination for cause, if there was a reduction due to government restrictions not allowing you to be able to reopen. Then you document that, and then you basically say that I would have been at full FTE count except for these things and show the proof. So that's what you want to do to ensure you get that 100% forgiveness. So you might have all the eligible expenses covered, but then the second step to look at these other things like your FTE count and your wage reduction, which can then reduce your forgiveness, even though you may have had over 100% eligible expenses to apply against the loan.
Perfect. All right. Our last question is the PPP forgiveness considered income for tax purposes?
I can answer that. No, it isn't. The income is not considered. The income is not taxable, but the expenses are not deductible if you expect forgiveness, like we said before. I'd like to say something else too about the PPP loans, and just from a balance sheet and a reporting note. You know, if you have a PPP loan and you're obviously, if you still have the loan, it's not going to be forgiven by the end of the year. But a lot of our clients are asking us, what do they do with the loan on the books? How do they treat it? How is it accounted for? And there's really more than one answer. The first answer is it's a loan. You treat it as a loan on the books. But you know, when you really think about it, that's a pretty lousy result, because you had all these expenses. And let's assume you expected forgiven. Okay, let's assume 100% of the loan is expected to be forgiven. So let's assume you had a $150,000 loan from the PPP. You expected 100% to be forgiven. You spent $150,000 of expenses, right? You used the money in 2020. So those expenses are incurred. Those expenses are on your books as expenses. Now you have the loan, which you expect to get forgiven, and that loan is not income on the books. It's actually a loan. It's a liability on your balance sheet, as opposed to forgiveness on your income statement. And so you really look lousy. It makes your financial reports look terrible, because you have 150,000 expenses when in your real mind you really had 150,000 of expenses offset by $150,000 forgiveness. So it should net out to zero. So, you know, that is something you might not want, right? Because it doesn't make you look good, especially if you need to go to a bank or a factor. So what we've done is actually, there is a law. It's actually under international accounting standards, because the GAAP rules, generally accepted accounting principles, are that right now, because the loan was not forgiven, even though you expect it to be forgiven, you didn't get formal notification from the SBA of forgiveness by 12/31. The loan is a loan and has to be reflected on the books as a liability. With some of what we've done with some of our clients, and we're recommending that they consider, is there is an international accounting rule that we can apply. They can treat that loan as forgiveness if they're eligible for it, and if they met all the requirements of the PPP program, which you should have, because you're going to do the application. We're going to work with our clients to confirm that. So we are going to be able to, if clients make this special election, to treat the loan amount as actually income. So there'll be meta matching. And in the world of accounting, matching revenue and expense is very important. So we're going to be able to do that for our clients if they so choose. They don't need to, but it's an option, it's an election that you can make. Just want to make sure you're aware, because you may not be aware of that.
Perfect. Thank you, Stephen and Jake, for those very thorough answers. That's all we have. Just a reminder, you can reach out and we can forward your questions on to Eric so he can get those answered for you. But Jake and Stephen, you have some big fans on our end, and a lot of great positive comments coming through of just how thorough and comprehensive your review of these topics were. So I can't thank you enough, Eric, Stephen, and Jake, for being with us today and helping us navigate this very complicated infrastructure, PPP loans, and financial planning. So thank you so much. Yes, this webinar is being recorded for anyone who has asked. So we will share that with you so you can share with your teams following this webinar. So thank you so much for joining us today.
A pleasure. Thank you for having us. It's a pleasure to be here. Good luck, everybody. Be safe.
Thank you. Take care.